Good evening, friends. Another important clarification by circular number 212, dated 26 June 2024. We have seen in the trade, in supply chain, 7 years of GST, and this mechanism was not available. But first time this circular is coming and clarifying a position, laudable one. And this clarification you can apply even for the past period. If some litigation is going on, you can always cite and defend yourself. But what is the case? Look at the factual position. If I'm a supplier and you all are my buyer, and I'm issuing a credit note under GST for post-supply discount or incentive, then what happened? If I'm issuing a credit note for post-supply discount or incentive, quite obvious, on the basis of certain milestone to be achieved. Once you complete, my buyer achieve the milestone, I issue a credit note which is termed as post-supply discount or incentive. As per section 15, subsection 3, clause B, the three conditions need to be met for getting the benefit of post-supply discount or incentive provided by credit note. And credit note are being issued under section 34 of CGST Act. So there should be agreement entered between both of us, supplier and recipient, either before or at the time of supply made. Second, my credit note which is issued by supplier must be linked with the invoices. And third, whatever GST component I charge on credit note, of which I have taken adjustment with my outward tax liability, to that extent my buyer, recipient, need to reverse ITC. But what is the challenge today? I'm having agreement which is entered before or at the time of supply. My credit note, supplier's credit note are linked with the invoices also, but I do not know whether my buyer, recipient, has reversed the credit or not. There's no mechanism available as on date, no mechanism. So what to be done? For understanding in a better way, again, I'm taking one numerical example because a lot of dispute on this point, so giving the clarity. Let's say I've raised the invoice for 100 rupees. I've charged IGST for 18%, and you have taken as a buyer credit of 18 rupees IGST. Post-supply discount incentive, let's say 10 rupees. So I'm issuing a credit note of 10 rupees, applying 18% IGST. So it becomes 1.8 rupees, 1.80 paisa, right? And this 1.8 rupees, I'm getting as an adjustment. I can reduce with my outward tax liability of that relevant tax period, wherein I'm issuing a credit note. This is the advantage I'm drawing as a supplier. But this is subject to three conditions. There should be agreement before or at the time supply, which is there. My credit note of supplier linked to the invoices, which is also matching. Only thing challenging for me for getting this adjustment, reduction of 1.8 with my outward tax liability is, I need to ensure my buyer, recipient has reversed 1.8 rupees. Corresponding ITC in his books of accounts, for which no mechanism available as on date. So now this circular is giving clarity and clarifying that this is the way you can do it, laudable one. And further, this circular is saying you can draw the same reference even for the past period litigation. Advantage to all of us together. Let me share this circular so that we can discuss what is being clarified. I'm sharing my screen. So this is the circular I'm referring to, 212 dated 26 June 2024. So I have discussed the basic part, so I'm not repeating again. But what they are clarifying, let me take you to that provision. Para 2.3 is acknowledging the fact that there is no system, functionality, or facility presently available. Acknowledging this fact. In view of the above, 2.4, para 2.4, till the time a functionality or facility is made available on common portal to enable the supplier as well as the tax officer. So this is not the challenge only for the supplier. Even tax officer is not in a position to cross-check whether the recipient has reversed the credit corresponding to the tax component charge on the credit note, right? Challenge to both of us. So what it is saying, please, here you should look at, I'm just, the supplier may procure a certificate from a recipient of supply. So as a supplier, I can take certificate from my buyer, recipient, issued by a chartered accountant or cost accountant, certifying that recipient has made required proportionate reversal of ITC 1.8 as per our example at his end. So your CA, your CMA will issue a certificate, recipient CA or CMA issue a certificate. Yes, you have reversed ITC of 1.8 at your end in respect of credit note issued by supplier. So this is what the clarity it is giving. Now, para 2.5 is saying the said CA and CMA certificate may include details such as detail of credit note, detail of relevant invoice number against which such credit note has been issued, amount of ITC reversal in respect of each of said credit note, along with details of form GST DRC 03, if you are reversing through DRC 03, or GST R3B return, or any other relevant document through which such reversal of ITC has been made by the recipient. Such certificate which is issued by chartered accountant or CMA shall contain unique document identification number, and that can be cross-checked and verified from ICI website portal, and that URL is being given. And for CMA, also it can be checked from their CMA website portal to check unique DIN number. Now, this CA and CMA certificate, when applicable, you'd be thinking when this is going to be applicable. So they are creating some clarity. Para 2.7, what clarity is being given? In case where amount of tax, CGST, SGST, IGST, plus, including cess, involved in the discount given by the supplier to a recipient through a credit note in a financial year is not exceeding 5 lakh rupees. So it is only talking about tax component on credit note. Please bear in your mind, it's not the amount of credit note, it's a tax component on credit note which is not exceeding 5 lakh rupees. In that case, instead of CA, CMA certificate. So quite obvious. Conversely, if it is more than 5 lakh, CA, CMA certificate. If it is less than 5 lakh, tax component on credit note, less than 5 lakh, then said supplier may procure an undertaking from said recipient that said ITC attributable to such discount has been reversed by him. So more than 5 lakh, tax component on credit note, CA, CMA certificate. Less than 5 lakh, recipient can issue a certificate to the suppliers along with the detail mentioned in para 2.5 above. Now, such certificate issued by CA, CMA or undertaking given by the recipient, as the case may be, shall be treated as a suitable admissible evidence for the purpose of Section 15, subsection 3, Clause B, Roman 2 of CGST Act, clarifying a position. So now next doubt which will come to everyone's mind, is it going to be prospective or we can apply the same for the past period where litigation is going on? Here is the answer. Last para. The supplier shall produce such certificate or undertaking before the tax officer, if required, during any proceedings. So it may be adjudication proceedings, or you can say appellate proceedings also, such as scrutiny, audit, investigation, etc. Even for the past period, wherever any such evidence as per 15 subsection 3 clause B Roman 2 in respect of credit note issued by supplier for post-sale discount is required to be produced by him to the tax authority, concerned taxpayer may procure such certificate, CA, CMA, for more than 5 lakh, otherwise recipient certificate, as the case may be, to the concerned investigating, audit, adjudicating authority as evidence of requisite reversal of ITC by his recipient. Here they are not saying appellate authority, but I'm telling you, if your case is being decided against and you have filed the appeal, you should procure the certificate and produce before the appellate authority, citing this circular, which is clarifying the position, and you will get much needed relief to see that whether your recipient has reverse ITC or not is being certified either by CA, CMA or by recipient, depending on the threshold amount of 5 lakh rupees. This is a good circular clarifying a position. Welcome steps, must be complemented. And this time I must say CBIC has issued and taken many initiatives, which is tax friendly and will go long way towards ease of business. Thanks for watching. Stay tuned. Thank you very much.